It's Thursday. That means it's legacy day over at BNC. Let's take a look at the VIX, the gold, the SPX, the NDX, and a few meme stocks along the way. The first thing that sticks out to me is the VIX, which at this point, I hope I'm a broken record, but if the VIX is up, we are bearish. If the VIX is down, we are bullish. And we are down on the VIX. So we should be bullish on the crypto. And so far, we are. If we look at the 30-week rolling correlations between BTC, USD, and the DXY, we're actually losing that extremely negative correlation. It's going sub 50% at this point, which is a good thing because DXY is screaming bullish. I'll look at that in a second. Gold is holding a negative historic correlation. So there's a flow out of gold, most certainly, and BTC is not following along with that. I'll look at gold in a second as well, but gold does not look bullish at all. SPX and NASDAQ both screaming on the correlations here relative to BTC and looking way, way overbought themselves, which is a problem if we stay highly correlated and there's a massive pullback in legacy markets. We're going to feel that tsunami of a risk-off move in crypto, undoubtedly. Looking at the DXY, the DXY, this is the daily 200 EMA, and it's at this point completely mean reverted back to that level at 92. Oddly, the US keeps printing money, but yet the DXY keeps rising. So a bit of a divergence there from fundamentals. This could perhaps form a multi-month inverted head and shoulders. I mean, this is weeks and weeks away. But you can see where we were at 89, 88 in 2018. Very, very similar. Fractal, shoulder, head, and then it just trended up the entire time throughout 2018 to 2020. So it'll be interesting to see what forms out of this and how crypto reacts. But again, it's best that we are not correlated with the DXY if the DXY is bullish, right? We don't want to be inverse correlated to the DXY if the DXY is bullish. And historically, we're mostly inverse DXY, arguably, because a bullish DXY is a risk-off environment, and BTC or crypto has been mostly a risk-on environment. Looking at gold on the weekly, 200-week EMA here with the cloud. We are inside of the cloud. We remain inside of the cloud, and it just looks like inevitably we're going to hit 1600 for gold, so that doesn't look good. Looks like it maybe even wants to tap the 200-week moving average. This could take many weeks. It could take a year until this gets figured out. Stuff with legacy is typically slow. With metals, it's almost even slower, which makes this whole run up with gold in late 2018 to early 2020 pretty remarkable, considering this is warp speed for anything in metals as far as moves up are concerned. SPX on the weekly, the first thing that I noticed is the distance from the mean, both the 200-week moving average as well as the TK lines on the cloud. So when you see this on any chart, regardless of what it is, immediately you should be thinking to yourself, this is extremely overbought and is ripe for mean reversion. Now, we don't quite have the stereotypical shelf of the TK lines creating C-clamp, but we're getting there. This is like danger, warning, overbought, danger signs at this point. The other part of it is, do the fundamentals just take over here? If we're printing all this money, it's got to go somewhere. Maybe it goes into the SPX or other stuff, but it forces some sort of risk on pseudo environment because you don't want stuff in treasuries or Forex, even though the DXY's bullish. I mean, it's just a really confusing scenario. It's not really straightforward. It makes sense that this is bullish if we're printing money. It makes sense that this is ignoring technicals if we're printing money. But eventually the chickens will come home to roost, and there's going to be a nasty, nasty pullback. We are more overbought here than we were pre-March, than we've been in the past 5-10 years, as far as that's concerned. So when it gets ugly, it's going to get ugly quick. NASDAQ, same exact thing, extremely overbought. You're starting to see this TK separation hit some sort of maximum before the Tenkin starts moving up. The 200 weeks way down here. So all this looks extremely uncomfortably overbought on any sane technical perspective. GME kind of did a bunch of nothing over the past few days. It had, a big drop, which got bought up pretty heavily, and now it's just sideways. And I could certainly see this shaping out to some sort of inverted head and shoulders. It doesn't fundamentally mean it needs to be higher than 400, but this isn't reality anymore. Reality's out the window. This is all about the meme herd mentality, and it certainly looks more bullish than bearish. I got to give it that at this point. Not anything I'd want to trade. The difference between AMC and GME to me is night and day. To me, when you get these curves over and over and over again, that is not a bullish picture at all. I'd much rather sit in GME than AMC. AMC looks very on a knife's edge here, ready to cliff potentially. Even though fundamentally, movie theaters are coming back slowly but surely, and GME is GME, but we're not in reality, right? We're in meme territory. BBBY flat, probably just as bearish as AMC looks, honestly. This isn't anything I'd want to trade on low time frames at this point. You'd probably be watching higher time frames, looking at EMAs and that sort of thing. But people have moved on. The trade was January to January 25th. And that was the trade. At this point, this is just people getting chopped up, trying to trade this one way or the other. MicroStrategy had this failed inverted head and shoulders, which failed spectacularly. Typically, it indicates strong bearish continuation. When you get this, when you get any reversal pattern forming and it doesn't complete or doesn't move as expected. Now, just like here, there was arguably a head and shoulders here. This failed and led to massive bullish continuation. Now here, there's arguably a messy inverted head and shoulders here, which failed and thus far has caught itself at the previous lows. But I'm not too confident until this is above 807, the previous neckline. I'm not confident in the trend for the upside. Square, kind of the same thing. Tesla, same thing. All these had the potential of completing inverted head and shoulders. Maybe this morphs into a two-headed head and shoulders. Yes, folks, that's right. Those do exist. I've seen it. I didn't invent that. Someone else has uttered that phrase before. The two-headed head and shoulders. So maybe we get another lower, higher low or whatever, some shoulder formation here, and you get shoulder, head, shoulders. We're going completely off the deep end at that point. But nevertheless, the narrative, the story doesn't change. Everybody's watching these horizontals here on all these charts. Tesla, same thing. Tesla, they're barely making 5 cars a year, or whatever it is, and it's all the way up here still. So that bothers a lot of people, certainly. GBTC has a negative 10% or thereabouts discount at this point. It has not reverted to parity yet with spot, which for some people might be a problem. I'm going to give them a little bit more time, give them at least 2 quarters to right the ship. Now, Barry has said that they are buying GBTC back, basically, to sort of attempt to right the ship, but that appears to not be enough at the moment. Nevertheless, the chart looks fine. I mean, it's a mirror image of BTC USD, essentially, with a few minor differences, but overall, we're seeing a series of higher lows with some sort of horizontal resistance. So this definitely is closer to an ascending triangle than anything, which gives us a bullish bias. ETH, the grayscale product for ETH, certainly had the potential for this head and shoulders, cup and handle thing. That all failed pretty spectacularly as this consolidates inside of itself here. At this point, we're probably hoping for some sort of W. I don't know. This is also around 10% below spot. Now, if things get crazy bullish for BTC USD and ETH USD, then we may see that discount turn into a premium as people pile back into this stuff. But I think when people see the multi-month consolidation at this point for ETH, along with all of the redemptions that were going on, it doesn't make anyone excited to jump in at that point. So it's certainly possible that if ETH pushes 2,500, for instance, this would pop up pretty significantly as you'd go from discount to premium. BTC1 exclamation point, the CME futures, this looks fine. This looks, again, a mirror image of BTC USD essentially, but If anything, it looks ready for 65 to 70 based on just simple fib extensions. And again, we're seeing some sort of ascending triangle cup and handle thing. None of this is bearish by any means, but you can see the difference between, I always forget if this is convex or concave, but this shape, these shapes versus the AMC, where we're continually making the opposite curvature. Simple observation, but powerful because it shapes the patterns underlying that price action. It's just continual W double bottoms or inverted and shoulders or cup and handles, whatever it is. You can zoom in on it from there, but this looks like a strong continuation. Certainly, ETH again, it had, or not ETH, ETH 1 exclamation point. This is the CME futures ETH contract. At this point, it's at 2026 plus, I think. So it's a little ahead of spot. There's a bit of a premium there on that product. And again, you had your inverted head and shoulders mess here in February and March. Not a lot of trading history just yet, but this looks like it will be adopted into the fold amongst the legacy players. If you want to check out how I'm trading BTC and ETH, you can pop it over to enzyme.finance, link in the description below. You can see AUM, depositors, trades, what I'm trading when exactly. If you want to copy trade this or inverse trade me, this is non-custodial portfolio management. You can connect a wallet and deposit USDC, and that money mirrors the trades I take, and then you can withdraw that at any time. No min, no max, no time component, open-ended. It's completely as frictionless as possible, sans ETH fees as far as in and out for the user. For me, the manager, I deal with the ETH fees on the trades. So that's all I have for this one. Like, dislike, comment, share, subscribe, hit us up in the comments below, and happy trading.